Hey guys, welcome back. It is time for a psychology hour. So you guys who've been with me at, is there an echo? What is that? You hear an echo on your side? Okay. Anyways, it is time for psychology hour. That's better. Okay. Welcome everyone. I'm happy to be here with you guys. And Tuesdays at 2 p.m. Eastern time is when we get to. You guys see me because I do not see us live. How is everyone? Okay, sorry. My camera was being super buggy. Okay, we're all here now. How is everyone? Welcome. Welcome to Psychology Hour. Okay, now we're cooking. Okay, so my name is Coach Becky, and I get to have this hour every week where we just talk about a specific psychology topic. And I mean, it's my favorite because for me, the psychology behind my trading and the energy that I bring to my charts is really powerful for my momentum in this world and navigating what I am doing on my charts and who I am as a person and how I am doing my best at leveling up in my trading. And so I am very privileged to be able to pick topics and come every week and just chat with you guys for an hour to talk about what's going on in a certain subject and something that I think can maybe help all of us with our trading and especially helps me with my trading. So I'm happy to have everyone with us. And if you know anyone who likes to catch these streams, like shoot them a quick ping, let them know that we're here, that we're live, and we will just get into it and they can just catch up when they get here. Who's here with me? Anyone? Throw it in the chat. Do I got some of us originals here? Where's my team? Come on. I know, it's a different time. Jaja, thank you. Jonathan, welcome. Yes. Okay, welcome back. Thank you for coming back. We had a great morning on the charts. That was some good money, good trades. All right. Well, I'm glad that you guys are here. I am totally team Blue Sky, and I'm happy to chat with us all. Hey, what's up? Some of these names, I don't want to say them wrong. Coach Becky, though, that's me. You guys know me. Okay, well, let's get into it and let's talk about what we're going to cover today. And like I said, I get to be the psychology kind of nerd out in that realm because I love it. And so I'm very privileged to be able to be in this position. So today we're going to talk about kind of a whole life approach that I have found that when I focus on this, I do so much better in my trading. And let's be real, like a lot of who I'm trying to become and how I'm trying to change as a person is to become successful in life, in trading, for all of my goals. Everything kind of spins into other things. Like I want my trading income to be able to be used for other income streams as well. Like I have a lot of goals that I'm doing, and trading is the heart of much of that. And so for me, I want to do any kind of thing that makes me a more successful trader. So what that looks like today, we're going to talk about some different strategies for just embodying that role and being that person when I show up to my charts. So I hope it is powerful for you guys because it was really fun to put this presentation together today so that we could just chat about it. So I'm not going to talk about charts and setups for this hour. We will again at Power Hour, but today we're just going to talk about like a conversation about trading psychology. So I want to talk about who we are when we show up at our screens, like who we present as, what our energy is, what our goals are, and who we're bringing to the table, essentially. So the habits, the beliefs, the energy that you carry, it doesn't appear out of nowhere. And you can't really manufacture it and have it be like one persona for trading and one persona for all these different things that we're doing in life. And so it comes from everywhere. It comes from a big picture, a part of who your life. Ooh, you are right on time, aren't you? I'm very happy to see you. Okay, so I'm going to bring this all together, but I want you guys to think about one habit in your life that you know needs work. Okay, so we're always there, right? So I definitely have areas in my life where I know that I could be a little bit better at and that I want to prioritize differently and make sure I'm continuing to show up as and that I know could use some work. So think about that for you guys, and we're going to come back to it in a little bit, kind of bring it all together. But that's kind of where we're at of like thinking about who we are right now in one aspect of your life, including. Okay, so the core idea of what we're going to talk about today would be that there is a pattern. There's a pattern to who we are and how we show up as humans in life, in trading, and what we're trying to pursue and create in all the domains of our lives. So I like to think that the way you handle discomfort and making decisions under pressure, your discipline, and the way that you show up, like with integrity and how you present in rooms and with your people, those aren't really trading traits, but they're like human traits. They are who we are as a person, how we show up on our teams, what we look for out of life, what our general approach is, what our response is, how we answer questions, how we look at opportunity. And so it kind of really, when you start to think about life and trading, there's tremendous parallels. And that's kind of what I want to talk about today, is about how it shows up across all of the different domains of our lives. There is a phrase that I think all of us know, which is the heart of today's conversation, which is how you do anything is how you do everything. And Martha Beck is titled with having that quote. She's a pretty famous author. But that is a phrase that I think everyone knows because we see it play out in different aspects of our life. So once you hear it, you kind of can't unhear it, kind of thing. And that is why I wanted to kind of shed some light on it and dig into like the science behind it and the research behind it and why it's something that we can lean into. So it actually isn't just a philosophy. It isn't just a catchphrase and something that we read somewhere that we liked and thought was catchy. There's neuroscience and behavioral psychology that backs it up. That's why it's got the traction that it has got. And that's why it's something that is referenced and, you know, considered in many, many different pursuits and areas of life as something to lean into and embrace for our best outcomes. So let's break that down a little bit, right? So we can kind of understand the why behind kind of what we're chatting about today. So identity-based habits, James Clear's research in Atomic Habits, everyone's heard of the book Atomic Habits, right? Shows that lasting change comes from shifting who you believe you are, not just what you do. Yeah, martial arts. Yeah, that's a discipline in martial arts that absolutely transcends all areas of life. I mean, those black belts is a certain type of energy. Mm-hmm. And then also self-regulation transfer. So this one is an interesting term, right? Self-regulation transfer, self-regulate. How do we regulate ourselves and make choices and manage our choices? So there's a study out in 2006, actually, that found that practicing self-discipline in one domain measurably improved it in others, including financial decision-making. So we'll have examples here today too, but like when you choose to be really disciplined in a certain area of life, and that's a huge priority for you, and you actually lock in and really adhere to it, that study showed that spread wider into multiple aspects of life because it changed kind of the energy that you were bringing to an important part of your life. And that had transference. And then also cognitive consistency. So cognitive, the way the brain works, and consistency, you know, having something happen regularly enough. So the brain seeks behavioral coherence. When your life's actions align with your identity, executive function and impulse control are both strengthened. So when you are really coherent with what your goals are and who you're trying to be, your actions and your identity kind of follow that because you're showing up in a certain way and the results will follow. Everything kind of lines up together and works together, and it's strengthened together. Or the inverse of that, you know, things can be weakened together as well, but it crosses is kind of the heart of it. So I want to break it down into different kind of sections here so we can kind of get into all of it and see it clearly in our mind's eye and think about what we're doing well, areas that maybe we could shine some light on and think about adjusting and pivoting on if we need to. Some people are really good at nailing this and others are still in the working phase. And I fall somewhere in the middle of that. Like I truly believe in this energy, but I'm 0% perfect and have plenty of work still to do in my life. And so that's why I want to like have these conversations with you guys too, because, you know, it really does make me stronger. So a couple different areas that we can look at this at today that we're going to consider and just talk out. So honesty, as a human, kind of plays over into integrity on the charts. Capital preservation. So there's an effort with how we use money and how we adhere it and how we exercise it. Healthy habits can lead to higher quality trades, means you want just really the best quality in whatever you're pursuing. There's a belief element that can create higher confidence on your chart when you really believe in who you are and how you're showing up for your life. That can transfer over into how you look at your trade options and how you believe in yourself and your future as a trader. Gratitude is very closely tied with abundance. And this is something that I reference kind of regularly in different aspects as well, because those two things really cross over into who you are as well. And then also intentional living. So let's just kind of get into them because I think it will bring it all into a clearer picture as we talk. So honesty, right? I mean, I think honesty, everyone is on some grayscale with that, right? I think that there's all kinds of things that we deal with in life on this. But I think when you really try to prioritize just being really open and clear with yourself in daily life, owning your mistakes, reviewing your choices, telling the truth, even when it's hard, even if it takes a minute to like deal with whatever's going on, but trying to stick to the core of your truth as often as possible in every way. There's an integrity behind that that directly transfers into your trade journal and your post-session reviews. And so the way that I feel like I was thinking about this with trading is that it's like eyes wide open, like if you F around and find out and you realize that you're kind of engaging in some reckless behaviors potentially, this is where you want to kind of own it. And you don't have to own it publicly. I don't think that that's necessary. I think people have a different relationship with that. But at least personally with your trading journal, if you have an accountability partner, if you have a direct mentor that you communicate with regularly, just saying exactly like what your situation is and what you need to address and what maybe you engage in that you wish you wouldn't have, but you don't want to brush under the rug. You want to kind of deal with the day at hand and then move forward from there. So the first, when you're really honest with your trade reviews, the lessons can shine more brightly. You can do less of that messing around and finding out if you really dissect it and figure out what the heart of the energy that kind of led you down the wrong path is so that you can avoid it in the future. This quote I really like is, the first principle is that you must not fool yourself, and you are the easiest person to fool. I kind of like that quote because we can write off a lot of stuff. We can change and shift the story with time. And I think it's better if we just kind of face the music. And even if it's not pretty, even if it means that you had a tilt day, because I've certainly had many, many tilt days. And sometimes that means you want to take a break. You don't want to talk about it right away. You need to go for a walk. You need to do whatever you need to do to kind of calm down your nerves. But then like kind of being like, what the heck did I do when that thing happened that I'm really upset about? And how can I deal with it and face it moving forward? So that's how I think about trying to be your most honest, open self in all aspects of your life, but just sort of like being real with the situation at hand and trying to be the best that you can. And that way, when you face the music, it's not painful on the charts and off the charts, right? That makes sense. Now, capital protection is, it ties into risk management. So this is where in life, this also, all of these things can be a little bit gray. None of it needs to be perfect is what I want to like preface all of this with, is that these are just areas that we can each be mindful of, but does not have to be perfect, because every once in a while, like you want to go shopping or you have a little like thing that you do that brings you joy and that you choose to, engage in, and it doesn't, and you get to be a human and you get to have little outlets, and maybe your thing is handbags or fishing trips or whatever, but in general, capital preservations and being smart with your money will kind of play over into your trading risk management. So let me break down a little bit. But intentional spending, avoiding impulsive purchases that were not a part of what you really want out of life when you don't have like an extensive amount of money, and building financial discipline outside of the trading area, they're not really separate skills. It's kind of a part of a whole picture. They are the same muscle as protecting your trading account, right? It's a pause before you spend, asking, is this purchase in line with my goals? Building a margin in your budget. So if you do really love to travel, what does that look like for you? What do you save in advance? What do you pay for on this way? How do you do a payment plan or whatever for it? How do you fit it into your life goals? So that way you are making sure that you're managing everything that you need to do in an intelligent way. That is very similar to trade management, right? You don't take on more risk than your account can hold, and you let it grow with time. And you protect your capital in a way that means that my account is this size. I only want to risk this much because I want to be able to do these other things with it and have it build up in such a way to have a buffer. So it's kind of eyes wide open and intention of, obviously you have to risk, you have to be able to spend, but you want to do it in alignment with your bigger picture goals when you're not in an emotional state. So, I mean, on the charts, right? Capital preservation is rule number one in professional trading. So the trader who avoids kind of frivolous spending in life that isn't aligned with the bigger goals when you don't have frivolous money in life, you rarely will chase the losses in a session because you're kind of cognizant of, this day, this is my goal. If I get this much, this would be great. If I lose this much, I need to stop because I'm not willing to lose more. Those kind of choices where you pass on the low conviction setups because they're not worth it. Like you're building up your account. It's not worth your energy to waste it on that. And then honoring your max daily loss limit because maybe that was a day that you just really couldn't get in alignment with the market and it wasn't doing what you thought and it was taking your stops. And so just, like peace out. There will be better days. Greener pastures are coming. And so I'm just going to kind of move on with my day, not risk your capital on that. And then your trade size is with intention. So it's not throwing everything at every trade. If you do go big, it's because you have a really great setup that you fully believe in and the risk, the stop loss placement is within a reasonable location in order to go with larger size. So it's just intentional. It just means that when you think about your money, your capital, your goals for your finances, you're intentional with that. And that can be, within a trade or also within your life choices. Because this goal, I mean, we've all heard this one from Alexander Elder, who's an author and a trader, but the goal of a successful trader is to make the best trades and money is secondary. So it's a focus on doing a really good job on the charts and making sure that you're not worried about your P&L coming, but instead you're making great choices. And oh, hey, welcome Fatima. Nice to see you, girl. We're talking about how you do one thing is how you do everything and how that crosses over into different aspects of our lives. But the goals that we are striving to achieve can kind of, transfer into all aspects of our life. And that's kind of a powerful energy to approach trading with. So welcome in for anyone who just joins. Now, the physical part of our body is definitely a part of this too, how we approach who we are in all aspects of our lives. So research from the Journal of Finance in 2014 found that trader performance correlated significantly with sleep quality and physical health markers. Now, I mean, I don't make this up. Like I just Googled this and was like looking into what was out there on this subject. And like they've done studies because this is a question that I think traders are having and everyone wants to have an edge in the market. And so by having, by studying these kinds of things, we can see what is an edge and what isn't. And so this study had definitive results that managing your sleep quality and your physical health is a competitive advantage when you try to put energy into doing the best that you can there. Now, again, nothing has to be perfect for it to be impactful, but rest. So sleep deprivation impairs the prefrontal cortex. So that is the part of the brain region that is your focus, your risk management, your impulse control, you're making strong business-minded decisions. And if that is impaired because you're sleep deprived and it's just sluggish and not really super attentive and ready to go, then the amygdala, the emotional brain, is going to shove it right out the door and take over your morning. And so even the best of intentions, if you don't have that quick firing in your prefrontal cortex where you can make those really smart business choices, your brain slides to what happens more easily without being prompted, which is those emotional impulsive decisions. Everyone knows the slide I'm talking about when you just can't hold the focus and so it starts to get sloppier and sloppier. And usually you can't turn that around once you get it turned. So sleep is actually pretty important for that. Now there are days when I just don't sleep well. And if that's the case, I always try and at least catch up the next day. I mean, I deal with it. Maybe I leverage down in the morning if I haven't got a good night's rest. But when I can catch up, it's important to me to maintain sleep. I obviously am a mom though. I mean, I'm used to dealing with some sleep deprivation. But I do think that when we prioritize this in general, especially ahead of trading days, it's really powerful as a tool. And then movement too. So exercise literally physiologically elevates your dopamine and serotonin. And so those are the happy hormones. Those give you energy and you feel really good about life. So exercise actually elevates those. It causes your body to release them. So it directly improves your patience, your focus, your emotional regulation through all of life. And so I don't know anyone else's experience, but after a really nice walk or an exercise session or whatever your activity is that you enjoy doing, walking with your dog or playing with your kids, you just feel better. That feeling is a literal neurological hormonal experience in your body. And so it doesn't have to be anything heavy or aggressive or really dripping sweat, but just movement in general causes your body to release those hormones and that creates that energy within you. And I don't know about you, but for me, I do a much better job at being peaceful and having good energy when I fit some movement into my day. And when I don't, and I just get zombied out in my screen time, or I don't feel well and I'm couch rotting, I just feel ickier. And I think that's the inverse of this, right? Which is a situation. And then nutrition also with this physical advantage that we're talking about here today. You do want to have and strive for blood sugar stability because that reduces emotional volatility. Everyone knows what hunger feels like. A stable body creates a stable mind and a steady hand on the trigger. When you are calm and fed and watered as if we're our own pet, treat yourself as your favorite pet, because behavior is better when we have the glucose and the nutrition and the balance that we need in order for our brain to fire at optimal functionality. If you're having high sugar hits and then lows where that drops out and you have no consistency from like some protein and some complex carbs holding you down there, keeping it from being such a high and a low situation, your body just reacts better, and it can take on volatility and impulse and excitement more steadily and not be as impulsive and jumpy because you have that stability of your blood sugar numbers. And so that's a very real scientific thing. I would encourage everyone to kind of just have this in the back of your mind. Again, not perfection, but as best as you can, because if you have some energy in your morning to set yourself up for the best success with sleep, with a little bit of nutrition, it kind of works out a little bit better. So you want to think about that setup. Is it costing you your ability to function well, or is it a benefit to you? So what you're doing, we all know our own truths here, and we all know what we could do better. For me, at the beginning, I said, what is something that you are currently working on? For me, it's both rest and movement in my life, because my schedule gets so busy sometimes that I lack in these things. Personally, I will cut sleep for things that I need to get done. And then maybe my mind cycles because I work too late and then I can't shut it off. And then also if I just have too many things that I need to do in my office and then I'm running to kids, different things, I won't be able to fit in exercise all the time either. And so these are definitely two areas where I try to do better. And when I do better, I feel so much better. So this is a good conversation for me too, to remind myself that there is science behind this. You guys with me? Feel your experience a little bit? Okay, this one is psychology, serious psychology, right? But it is so true. So if you hear nothing today, I like this one a lot. So I think that believing in yourself is super, super powerful, for good or for evil if you are struggling with this. But your identity as a trader is downstream from your identity as a person. So if you don't fundamentally believe that you are capable, worthy, resilient, strong, able, but if instead you doubt if you will show up and you'll be able to do this, and if you really have what it takes, and if you're going to be the one that makes it, if you're going to be the majority that burn out and lose, that looks like hesitation on valid setups and over trading to fix it right now so no one has to see, and to prove yourself, and bailing early on winners. And so those are very different kind of energies that you can bring to your trading. This Henry Ford quote, of course, is the one that I was thinking of with this, of whether you think you can or you think you can't, you're right. And so that is the self-belief kind of energy that confidence isn't built in a brokerage account. It's built in every promise you keep to yourself. And so if we don't fully embrace this, it's sneaky. This is a sneaky son of a gun where it can be, you can self-doubt yourself, and you can go down the I don't know if I can do this. And what if it was just a one-hit wonder that I did so well that 1 month? And what if blah, 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 blah. Well, then that causes you to get down the what ifs trail instead of I know how to trade. I know what my setup looks like. I'm excited about these opportunities. I want to see what the market presents. I'm going to be patient because I believe in the abundance of the market. And I know that I've showed up for my trading career this long. And so clearly there's something there. And so believing in yourself that you've got this, nothing has to be perfect, but the fact that you just keep showing up and you have this positive energy and momentum towards what you are doing, that compounds over time too. And so I definitely would encourage you guys to just think about this, and in your quiet moments, this is when it's really impactful, because everyone has a voice that runs in the subconscious of their mind. And second guessing is so easy and insidious. And I think everyone does it to one degree or another. But if you can kind of capture those second guessing thoughts and pivot them into, it's fine. Even if I lost a trade or I had a day that ended red, I'm still a trader who shows up every day and works my butt off and attends labs like today. And I put my mind on being my best self. And so that right there makes you worthy of all of the best successes because you're showing up for the work of it. So we've got to try and shift our internal subconscious thought from hesitation and concern and self-doubt to that abundance and faith in ourselves. I love the whole idea of faith over fear, and everyone can have faith in whatever avenue they would like to believe in terms of God or higher power or what have you. But I believe in having faith in yourself, because how we show up and the energy that we bring to our trading crosses over into our execution outcomes. Because when you are feeling abundant and patient and believing that you will see a good trade and you don't have to throw everything at just any kind of trade, it slows it down a little bit, and you can have a little bit more patience with the market and your system and the long game mentality. And so this, I really hope that everyone kind of just like absorbs and strengthens how you think of yourself, because I think that we should all kind of, love ourselves a little bit more. Who cares about everyone else in this world? But the more we love ourselves is creating an example for the world on how we deserve to experience this life. Now, this kind of is different, but pivots on that. And welcome, Matt. Thanks for being here. Gratitude, you guys. Gratitude fuels an abundance mindset. And so I do think that what we are thankful for multiplies. And these things are closely tied. And this is about how, similar to what I'm saying with having faith and belief in yourself, this is a similar type of energy, but it's more for like the opportunities and the world that we're presented with and seeing abundance over scarcity. So with scarcity thinking, I have to make money today. I need to get to this level. Like, this is not working. If it's not working, I told my spouse that I was going to make it by this month, and now I only have 4 days left in this month. Like, why am I going to have to face the music again? Like, I need to make it work now. That is a really destructive force in a trader's psychology, because it's so much pressure and nervousness and anxiety, and it changes the way you view opportunity. But if we can shift it and try and really focus on gratitude, that will rewire the pattern in our minds. And so with gratitude, it's more of this, like, there's so much opportunity. I just need to be patient for that. So, I love breaking down and seeing if there's science behind anything that I believe in and find good energy with. And so the science on gratitude is actually quite numerous. It's been studied in multiple different studies, different countries. But one study in 2019 found that gratitude practices reduced financial impatience and led to better long-term decision-making, including delayed gratification and reduced impulsivity. And holy moly, do you not see how I'm talking trading here? Because we have got to make the best decisions that we can. And that sometimes means that we won't have an immediate P&L by 3 minutes into New York session. But instead, if we're patient for the absolute best setup to present, and then we put our leverage on the line, you're not the first one in and out of the trade, but you maybe caught the best trade of the day. And so that delayed gratification, because you're choosing patience, because you know that there could be a really good setup and you want to kind of wait. Such good energy. It also reduces impulsivity as well, because you're coming at whatever you're doing, being traded or anything, being thankful for the opportunity that is coming and kind of waiting to see what presents. And that patience is so valuable. And so with trading, like I said, you feel gratitude for your account, your P&L that you have had, the successful trades you have had, your access to the availability of trading, even to have high-speed internet and this knowledge, and someone introduced you to trading at some point, and now you're here and you're deep within this world. And it's like so beautiful. And so the skills that you have developed, the setups that you understand, the playbook that you have established or are building, that is something to be very grateful for. And so when you can instead be like, this is wild, that as an adult, I have found this world where I can make hundreds of dollars in minutes. And I am surrounded by really good people who are striving towards the same goals that I am and bringing good energy. And we can kick back questions back and forth. And my accounts get to grow, and prop funding companies, holy moly, like look at BluSky, daily payouts and clear rules. And the opportunity is really beautiful. And so to be able to have this skill and the access, it's great. And so if we can have that approach to trading where we are grateful and it is abundant, then we do less of the monkey business of forcing trades out of kind of desperation. But instead, it's like we're doing this thing. And my experience has shown me that if I wait for my setup, then I can get a really quality trade. And so trading from that abundance basically pulls you out of that fear and scarcity mindset where you have to grab everything or else you're just not making it. And so I encourage all of us to try to shift that, because it does change your energy and your approach to everything in life, but on trading especially, having that just beautiful view of your opportunities and the momentum that you could get and the experience that you do have and the people that are around you, really powerful. So, do you guys sit down feeling grateful for the opportunity or pressure to perform? So we're about halfway through. I just want to see who's listening. Do you guys think about this? Is this a factor for who you are and how you want to approach your trading? Because I do. I found a couple of years ago, when I was trying to rewire my brain because I was struggling in trading, that when I could shift and start to feel gratitude and appreciation and like started to notice in hindsight how I knew nothing, it was a total disaster on the charts my first several months, to where I was even a couple years ago, it was like amazing. I was really excited about the opportunity, and I've come even way farther than there. Yeah, Jaja. Thank you for listening and answering. But when I feel the gratitude for my opportunity, I have less pressure and less anxiety and less hunting for the P&L so that I can feel better about myself. More so it's like, dang, trading is so cool. Like, look at all the great people that I met and the opportunities. Yeah, that too. I think that it's a good energy. Yeah, diamonds are forged under pressure. Okay, so I do think that trading puts pressure on you no matter what. And I think that there's no way to succeed in trading without feeling the pressure and without losing and without having frustration moments. And so that is a part of why I think these conversations are so good, because the pressure and the scarcity and the fear are non-negotiable. You are guaranteed to experience those as traders. And so what we have to do, the way, in my mind, the way we have to deal with trading is, how do we manage that? How do we get in those situations that are inevitable as traders? And how do we pivot those for actual growth and stability and longevity in this game? Yeah, every time you get out of the gratitude mindset, messes you up. Yeah, same. Yeah, so I absolutely love your point about pressure creates diamonds, because pressure creates change. And so when you are in a high pressure situation and maybe you do really want a P&L and you've been building your account for a long time and you tilt and you blow it and you're like real mad. Who's ever been there? Because I have. And that pressure and frustration and anger made me face this stuff, made me have these conversations with my mentor and my team and my accountability partner when I was in those moments, and have experienced those moments in my career. And that pressure has made me have to pick. Like, I can get real pissed. when you kind of half-ass things, for lack of a better term. So precision on the charts, it's not an isolated skill, is I guess kind of the core of it. So it's the natural output of a life lived with intention, of an approach to trading met with intention. It's deliberate choices that we make away from screens, on screens. It's the practice that you show up as in trading, the way that you have a trade system, the way that you journal, the way that you show up to labs and conversations and to your partners. Maybe you're having a great day, but your partner's not having a great day. So how did you show up in that relationship so everyone can grow together within the community? That approach to all of it leads down the line to how you execute your trades. Does that kind of make sense? I love Jim Rohn. Whoever doesn't know of him is missing out, because he is a wonderful human. But one of his quotes is, discipline is the bridge between goals and accomplishment. So if you have goals, just wishing them into fruition and having, affirmations around them and really wanting them doesn't get you the outcome. But having goals and then having a disciplined approach and a strategy and intention with that, that is how you transfer goals into output. And so I love thinking about how we are moving through life and what energy we want to bring to it and where we want to go, what targets are, because your trading plan can be really strong, but it's really only as strong as the person executing it, right? Because you can monkey around and get all sorts of outcomes from a trading plan that maybe at its core is really good. But if you chase, you don't get your entry, and then you chase after it's already well underway. Or if you hesitate and then you end up taking a counter trend trade move because you didn't get the one you wanted, well, then it's still not good for the counter trend trade, but you're just having FOMO. Bringing the strongest person to your trade plan will help you execute it to the best of your ability, if that makes sense. Because something has to make our biggest goals a reality, and that is the choices that we make on the charts, off the charts, who we show up as, how we prime our bodies to do what we intend to, the self-talk that reminds us that we are capable and the market is abundant and the system works because we have spent all this time fine-tuning it. So lean into the system and try and embrace how you want to show up as a trader, because you've put energy there and you have experience there. And so letting that lead makes it so much easier to just go down that path, because your chain reaction is in the right direction. You have put forth the energy and the intention on being calm and patient and rested and attentive and tuning out noise that is toxic. That makes it so much easier to make healthy choices when you've cut out the unhealthy that led you to the moment where it's time to execute. It builds who you are and who the person is who's about to hit buy or sell. That's kind of the heart of this whole thing here. So now here's where I'm going to be real with you. We humans, and everyone slips. And I think, who hasn't been there? Because I certainly have, where you're trying to recognize that you're acting kind of a fool or a little wild or whatever. This other situation is really pulling your attention, and you want to try and piecemeal your life together and do a really good job here, even though over here it's kind of a disaster of a situation at the moment, because that's life. Life isn't really clean. Humans have a lot of dynamic elements in our lives, whether it's driven by you or your family or the people around you, or maybe you have another job while you're learning to get good at trading, and maybe there's some discord there. I think that it's easy to get kind of tripped up here because you target really doing a good job over here, but then letting the things over here slide. And that can work for a little while. It can be a situation in the short term that's not a big deal. But if it's long-term approach where this big part of your life is kind of crazy and unstable, but you really want to lock in over here and do a great job, there's a lot of risk with that, because there's such crossover, like we've been talking about during this hour today. The brain seeks coherence. So there's some science behind this too. But basically, if you're disciplined on your trade plan, but chaotic in your schedule, your diet, your spending, your brain gets a mixed signal about who you are, about your priorities, about what you actually want. And it defaults to the dominant pattern. And so that's usually the unstructured one, because it's so much easier to slide into unstructured kind of chaos. That's a natural slide of not really pushing yourself to be your best. And so that default can kind of pull your energy and your executions fast. And so if you kind of think about, if you are doing all kind of crazy things, maybe you're deep in debt because you made some choices in another situation and you're trying to fix it in trading, and you really just want to do this one trade, but you have all this carryover from all this other stuff. it's going to be a factor that is a risk. And so I think to our best ability, we've got to get that coherent with who we want to be on the charts. And not now, depending on what you have going on, that's not necessarily going to be a super quick, easy fix. It could take time and be something that has to be pivoted over time. And so allow that for yourself, right? I mean, we have to give ourselves grace to be where we're at in life and adjust with what we need to adjust with. I mean, I've certainly had some moments, even as recently as this year, that have really thrown me off my game and took my attention. And so I had to kind of stabilize things in order to be my best trader self because of this exact crossover. I think identity inconsistency leads to execution inconsistency, to say it in another way. The research on behavioral consistency does show that people act in line with their perceived identity, not their goals. So if your overall life doesn't reflect the trader that you want to be, you'll keep kind of reverting back because that's inconsistent. And the easier, like I said, is often where we slide to when we're not really, really purposeful. And so eliminating or downplaying those inconsistencies will make it easier to be stable because, like I said, you're not being pulled in multiple directions from different sort of energies. Instead, you're just on the trajectory that you've set yourself on, and it flows more easily instead of fighting the current and getting spun around in all kinds of ways and being in a really good trade and trying to do this thing and then having all this someone come at you. Maybe it's an unhealthy relationship and they're like, how are you supposed to trade well with that kind of energy at you? So that's something that you got to try and maybe back off on trading while you get this other thing stabilized so that you can really be focused in all the ways when you're trying to show up at a high risk, high performance situation, such as trading. Fixing only your trading without fixing your life, it's like patching one wall of a leaking house. You know, if there's multiple ways that it's just weeping all over the place and you're just trying to cover little band-aids on things, like the net output is the leak. So I think that this one is complicated because everyone has different kind of external forces and situations going on. But to our best of our abilities, try to narrow it down. Now, I'm not saying you can't be a successful trader if you have external forces that are kind of heavy, but I do want you to know that that's a risk. And so in order to try and when you're at your trading computer, if this is your situation, to the best of your ability, I would encourage you to try and situate whatever the external forces as best you can and put it out of your mind. That way, when you have your hands on the buy and sell button, you're really dialed into having that focus because it's harder. It is harder to be consistent on the charts when your life is a little bit chaotic. That's just sort of literally neuroscience. So just, something to bear in mind with that. So you guys, I am a firm believer in giving ourselves grace, which is important to come after that last slide because, humanity, right? We are people. We have families. We have external forces. We have stressors. We have financial responsibilities as adults. And so knowing that life is not perfect and we should not have to try and be perfect, that's just kind of the situation and that it's okay. Sustainable transformation is slow by design. Research on habit formation shows that it takes an average of 66 days for new behavior to become automatic, not 21. I have even heard that is nowhere near the truth either, that it's even more than that. And so basically it's a lot. It's a lot of consistency of showing up and then allowing that to become who you are and gravitate to more naturally. But depending on how hard it is or how complex it is and how layered it is, it's going to be any number of days, but at least 66 per recent studies. The goal is not perfection. The goal instead is more a genuine whole life shift that rewires who you are at your core so that the focused intentional trading is simply an expression of who you've become. Now, this is how I got to my first payout season, my first successful season is when I really embraced this of I gotta be more real with who I am. I still had a lot of external noise going on and blaming, past things in my life that were hard. So of course I wasn't making it because look where I came from and blah, blah, blah. The internal story of strife and struggle and not having enough early capital and whatever, being in that kind of negative, this is hard headspace was holding me back. And when I embraced, shifting my mind to the gratitude and letting it take time and believing how far I have come, that shifted my core. And it took a while. Yes. Strive for excellence, not perfection is exactly it. And so it's in children's sports, it's in a business life, it's in entrepreneurship, it's in trading, it's in a successful life, because literally humans cannot be perfect. There is no such thing as perfection. And what you're dealing with at the time just shifts over time. The struggles that kids deal with is different from teenagers, is different from young adults, is different from middle-aged adults. You're never going to have a perfect situation. So instead, striving for that genuine, good energy, purposeful approach, intentional adjustment to what we're doing in life, that shifts who we are and how we come to trading. And that gives us the energy for our best outcomes on the charts, because it sets us up for a pathway of smooth, steady approach to everything. James Clear was the author of Atomic Habits, which I'm pretty sure everyone has read. And if you haven't, you're missing out. Do it. But one of his quotes is, you don't rise to the level of your goals, you fall to the level of your systems. And so if you just choose to always have a strong system on trading and with life, and on nights before you're trading, maybe you don't drink, if that's something you do, and you go to bed on time and you wake up at a reasonable hour, that way your eyes can get up, your brain can get firing on all cylinders, and you can be ready to execute your system. That type of energy 5 days a week when you want to trade put you on the path to make it smoother, to being focused and seeing your setups with patience and abundance mindset. And so having the systems in place just makes the habit formation and the habit adherence easier. And we're all about like knowing that as humans, there's not perfection, and the market's going to do whatever she's going to do, and no trade system is foolproof. Having that best setup and that best approach and intentionality, we need to make it easier. Like any advantage that we can get in our trading, we should take. And this whole conversation about setting yourself up on the best trajectory for that path that you're going to go down is powerful, because it's beyond just the strategy of knowing what a good trade setup is. The candle pattern, the execution trigger, those are critical to being a good trader. You can't be a good trader without that. But this is the backbone of that, of how you show up in order to execute that. Like, someone can write that down for you. You can buy that on the internet, I'm sure, that says, when you see XYZ on this type of market, do this, make money. Probably it's true. But the reason why a lot of people burn out of trading is because the back end is this, of like adherence and understanding and the complexities and the support and the faith in yourself, and coming at it with really smart intention and treating it as a business shapes your ability to execute as that. Flips are part of the process. They don't erase progress, but they're data points, just like a losing trade. And so that's this whole, don't strive for perfection. Instead, recognize that each day will shore you up, will give you experience, will teach you something, whether it's good, bad, I should have held longer, I made money, I could have done this better, I didn't make money, this is what I kind of missed, this is how I think I want to see it differently. Yes, long game, exactly. And like letting little things pick at your ability to hold steady is not it. Like, let that crap go and lock into like the long game of, I show up every day and I believe in my ability to succeed. And so I'm going to give myself grace along this journey. Like, it's just really important. So let's talk about the action plan, kind of bring it all together here. You don't have to overhaul everything overnight, and you shouldn't. You strive to do that, you're gonna make yourself crazy and just mess yourself up more. But instead, like, pick an area. I think we all have areas that we are not perfect in, because we're humans. So I would encourage you guys to pick an area after hanging with me for the session today, and start to build some identity evidence around who you want to be in that area, and something that you can strive to do a little bit better, and see how that kind of plays over into your executions on the charts. And so sometimes it's just being really honest with how you journal, write out your really clear trade review. You don't have to share it with anyone if you don't want to, whatever serves you in that purpose. But really saying, like, I was kind of jumping on this entry. Had I waited for this, it would have been cleaner. And this was such a good setup that I should have had a little bit more size and scaled in this way. So if I see this again, I should remember that it did go 3x instead of just 1 R to R. And so even on the winning days, being really honest with your trade review will give you more knowledge and wisdom and experience, and make you a stronger trader down the line. But not ever journaling or just haphazardly saying, like, I won, so I'm cool, like, let's go. There's always lessons to take. So if you really believe in your trading is your business, like, accept every single little information bit so that we can like be our best, right? And then protect your morning. So commit to something in your pre-market routine that makes you stronger. really good sleep or a little bit of movement in the morning, stretching or what have you, a strong breakfast, hydration in the morning. Sometimes I'm West Coast, and so I cannot eat at 6 a.m. It's just too early. But I do want to prioritize my sleep and a little bit of stretching and some water to start my day. I don't actually go straight into coffee, which is surprising some people who know me because I'm pretty energetic. But whatever it is that gives you the strongest setup before you start engaging in the market, it's probably not like, late sleep and just, big slug of sugar or something. But everyone knows how they set it best. So if there's something in the morning that you do sometimes and you feel way better with, try to do that more often and see how that goes. Gratitude is something that I cannot preach enough. And I don't like to say preach, but like encourage, believe in, support, have felt the difference of in my own life. And so I wish that for everyone. And I think that it's kind of maybe a soft word, a fluffy word, whatever. Judge me if you would like, but also don't judge me. Before your session, just name things that you're grateful for and just kind of put your mind's eye on like, I'm so thankful for this opportunity to trade and my safe, warm home that I got to wake up in and this delicious coffee with the creamer, just how I like it. Like, can you see just saying 3 little things with your eyes closed and picturing them in your eye and like being in that place? Like it's good hormones just right there. That dump of like, gosh, like I've got some good stuff in front of me. I've got good opportunity. It kind of pulls you into that like gratitude, which leads to abundance, which leads to patience and waiting for your setup. It all spirals into each other. And so starting your day with gratitude is a really powerful approach. And then an intentional spend decision. So if you think about your risk management and how much you're going to allot for a trade, what your goals are financially, maybe you make sure that you're putting all of your capital and your choices with your money on your biggest goals. Some people, this is an issue for, some people it's not an issue for at all, but try to make smart choices across all of your financial things. It does play over into your risk management on the charts of making sure you're kind of aligning that aspect of your life for your greatest good as well. It's the power choice. All right, so let's just kind of round it all out today with thinking about who we are becoming as traders. Because most elite traders in the world aren't elite only in trading. You guys know what I mean? Like the one we've seen the trader interviews out there on YouTube for the traders who've really like done some really cool stuff and made some money and made some impact and are really out there in the world. They're elite in more areas than just trading. It's driven, intentional, self-aware humans. Their trading is a reflection of that. I mean, right now, I didn't even plan for this, but I'm just saying this out loud. Like, look at Mike Tolbert, who is the owner of this company and created BluSky with a team of traders that he had been with for many years. That type of energy, who is like a strong trader and leads and shares his ideas and supports his friends and has the idea to bring this wider and to create a company and have that company be really honest and authentic and support traders and the growth. Like that is an example right there of wanting to be elite in multiple areas and how it kind of crossed over. Because I don't, when he started trading, I doubt that where he is now was his initial goal, but it spirals. You start that cascade of effect of who you want to be, how you want to show up, who you meet, how you show up to the people that you meet, how it grows, how you can see a bigger P&L, how you can see a bigger P&L as a team, how you can think about what you can do with the money that you're making and how you can spread that and how you can share that wisdom. I mean, there's literally no other prop funding company owner and boss trader who trades like Mike does here at BluSky. And that's incredible. And that sort of energy has cascaded into building something pretty impressive. And so I believe in that energy. One small example of this whole situation. So it's not the daily increase, but the daily decrease. Hack away at the inessentials. That's a Bruce Lee quote for cut out the things that don't serve you and lean into what really does. Like do the things that make you strong and powerful and set off the right chain reaction for who you're trying to be. That makes sense. So this is what I want for me. This is what I want for you. This is what I want for all of us, is to level up our whole lives, to embrace where we're going and allowing the charts and our executions to follow. Like how you do one thing, how you do everything. So how we show up, who we are, what we set up for our day, what we set up for our lives, what we set up as our approach for the long game does snowball. And it doesn't happen overnight because many, many days of habit formation and then the P&L is the laggingest of lagging indicators, right? But it matters and it builds. So If you guys have hung with me, I appreciate you all for being here. I do want you to think on a personal level just of what we thought about today. One aspect of all of this, I would argue that all of us could put a little bit more intention on. And so think about that for yourself and continue to try and just level up your whole self, because I think we all should be rich. And I think that trading is a method for creating wealth when we harness it for good and putting our whole energy behind it. Like that builds to that. So that's what I got today. Thank you guys for being with me. This Tuesdays will be Psychology Day. I'm going to do a psychology lab every Tuesday at 2 p.m. Eastern, the hour before Power Hour. Sometimes the market is still a little sluggish from coming out of lunchtime. And so we kind of wanted to shake up the schedule to have some variations in our streaming content. And so Psychology Lab we just wrapping it up. It's at 2 p.m. on Tuesdays, and then Technical Lab with Coach Matt is excellent, and that is on Thursdays at this time. So appreciate you guys all being here. Thanks, Jaja. I really appreciate your interaction today and kicking it back and forth with me. Matt, as always. Fatima, you're my girl. I appreciate you guys. So cheers to gratitude and good energy and building who we want to be in this life and getting the P&L that follows. Now, I had a great trading morning. I streamed with Justin this morning. We had really some solid trades this morning.
Up and establish the higher high, and price now comes down to establish the higher low. Or number two, it can consolidate. And that's where a lot of people get the overextension wrong. Is overextension can be alleviated through time. Remember, charting is not just price. I know it's what we fixate on most of all because it's the sexy conversation. But remember what a chart is. A chart is a study of price over time, which means time can act as a correction. And if we get that high base, a lot of times a high base will reset the extension and that's just mechanical in how indicators work. And so the first pattern that you kind of track at the top end of a move here is that high base. Now, you're going to know very quickly whether or not we're forming up a high base team, because the high base will consolidate. Well, once you start getting that first downward movement in price, you know you don't have a high base. You know this first candle here where you get to the top end and you start to see the momentum shift here. Like if you're looking at it right here, you don't know at that point whether or not you're going to get a high base or whether you're going to get a flag base pattern. You're very open-minded to both. And so the first pattern you kind of bank on at the overextension level is you bank on what's called the high base. The high base is simple consolidation at the top end of a move that will alleviate the consolidation, and then you get ready to do another breakout and you just trade that pattern over and over and over again. Now, obviously, that's not what happened here. We got that first slowing momentum candle here, And then let's come into the lower time frame here on the 5-minute chart to kind of look at the momentum here. You see that start to come down, 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 down. You see the base here. You see it kind of come down right here. And so as you start to come down, now you see this through the depth of the retracement. The depth of the retracement is how technicians track the pullback. There's not one level, there are three. And so let's identify those three levels. The first one that you're going to identify, and you kind of look at this through, and you can look at the depth of the retracement through a few different lenses, team. But one of those lenses that you can look at through the depth of the retracement is through the lens of Fibonacci retracement series. The Fibonacci retracement is a wonderful way to help you understand how far a market can truly pull back before you're no longer dealing with a pullback. And so the first level that you kind of track in any pullback series is you track the flag-based levels. They're called bull flags, and they associate most likely with the 23% pullback. And so when you're dealing with that extension and you start to see the extension start to slow down, you start to get, okay, let's get ready for that pullback. Now you might say, well, Matt, should you short the pullback? I want to short a flag. I want to short an extended high base. I want to short a flag. There are different points in the retracement where you could entertain a little bit of a counter trend short, but I wouldn't do it at the tippity top here, because you never know if it's the tippity top, guys, before you start moving back down. People said it was the tippity top here. Anybody who tried to short got busted up. People said it was the tippity top here. Anybody who shorted and went against trend got busted up. People who saying it's a tippity top up here and they go counter trend, you're going to get busted up. You don't want to trade against that momentum. And so the only time I would entertain taking a short on the against the trend is as we start working a little bit lower in the depth. And I'll explain that here in a second. But the first level you track is you track the flag-based levels, the momentum levels. When the market has momentum, that's what you're anticipating. You're anticipating momentum will create more momentum. And so we obviously have momentum here. And so the first thing you're going to track is that momentum pullback to the 23% level. The 23% level is the first series in that pullback. And so what we're looking for there is just what's called simple confirmation. We need to see the level hit, and we need to see that slowing momentum candle, upward movement in price, and then we're ready to trade that flag. The second level that you track, if we don't get confirmation at the flag level, is what is called a standardized retracement. A standard retracement in the market is when the market gives up at least 38% of what it just achieved. And that's what the Fibonacci levels are suggesting here. If you just went up 100%, well, the 50% pullback is you are giving back 50% of what you just anticipated. And I remember, just to kind of anchor on the point here on that 50% pullback level, I remember it was about a year ago. I was watching CNBC, and there was an interview with Scott Bessent, the Treasury Secretary. And for those of you who don't know Scott Bessent is a hedge fund trader. He's been a trader for decades in the market. He comes from Wall Street. He was part of the George Soros Wall Street Management Group. He's a cutthroat trader. He understands technical analysis the same way that you and I do here. And what he said, I guarantee it made no sense to the person who was interviewing Scott Bessent. But when he said it, it made perfect sense to me. Somebody was trying to paint the argument that the market was terrible, and Scott asked the host a question. Scott Bessent did. Treasury Secretary Scott Bessent said, how much did it go up yesterday? 4 points. How much did it go down today? 2 points. So 2 points against 4 points is nothing but a 50% correction, and that's just everything mechanical in the market. The host was trying to make a big deal out of this one move in the market without the greater context of the market. And a 50% pullback is not a bear move, team. It's not. It's a bull move. The bulls are pushing it up. The bulls are locking in profit on the downside. up until you start getting into the standard retracements. The 38 to 50% level is that standard retracement level. Now, as you work underneath that, we start seeing that through what's called a deeper retracement. A deeper retracement is going to be very important because they can be really, really, really powerful buying opportunities, but only with what's called proper development. You have to see some consolidation set forth to really dial that in. And so when you're looking at the market right now through that lens, the depth of the retracement lens, let's remove our line at 75K. So let's remove our line and let's pull up our Fibonacci retracement and let's draw our Fibonacci's here. Now, we know we drew our motive wave. That's what a wave is called in the market. It's called a motive wave up, corrective wave down. That's the proper language when it comes to technical analysis. So we got a motive wave up, and now we're anticipating that corrective wave down. Well, these percentage levels are the levels we're kind of looking at here. Now, as it goes, there's going to be other things that I want to take a look at here that coincide with my Fibonacci levels, and that's going to be the 9 EMA on the 15-minute time frame. And so I look at anything that happens around 23% in conjunction with the 15-minute 9 EMA. That is your first test of support, and it played very consistent here today. It came right down into that support level right here at the 15-minute 9 EMA. It got underneath that 23% level, and the next candle was a slowing momentum candle. The next candle, again, another slowing momentum candle. And so what happened today when we were battling this pullback here, and this got a little bit choppy right here, we were testing the flag-based patterns. Now, when you're coming into a level in a retracement, it's not good enough to just hit the level, team. That's not good enough. If you're just buying this blind test against a pullback, you're going to lose over time. You're absolutely going to lose over time. You might not lose this one trade or the next trade or the trade after that, but you don't have a probable edge. You just have a level. And remember, there's 3 levels we track. And so when you hit a level in a retracement, it's the first step. It's not the last step. You have to confirm a retracement. You absolutely have to see confirmation. Jesse Livermore, one of the greatest traders, if not the greatest trader of all time, who put everybody in that that I know that to dust. He was a day trader before computers were around, before algorithms were around, before moving averages, before Fibonacci, before everything. He was just a technician. He focused primarily on price, and he said confirmation. He was a day trader 100 years ago, guys. He said confirmation is the insurance that you're right on your projection. Well, if your projection is it's going to go up because we're in a really good trend here today, and it's just a shallow pullback down to that rising 9 EMA, if that's your projection, fantastic. Did it confirm? Were you right on the projection? You had a trade idea, but did the market confirm that? That's what Jesse Livermore's talking about. It's not good enough just to get an idea in your head. It's not good enough to say, oh, I got a great trade idea. Do you know how many times I've had a great trade idea? I've had some of the greatest ideas ever. And then when you go and you put it in action, it's ridiculous. It's absolutely ridiculous. Good idea in the head might just be a good idea in my head. Does other people support it? That's what confirmation's all about. It's about if the market is seeing the same thing we are seeing, and it sniffed it, team. Like you're seeing this slowing momentum candle here. Then you see it test up here. Here's the high of the candle. When you're talking about confirmation is a closing candle above your slowing momentum candle. So when you look at a pivot formation, for example, a pivot formation, that's a good question, Woji. I'll get into that here in a second. if you look at a pivot formation has 3 candles in it. The first candle is known as the preceding candle. That's this candle right here. You see this candle? That's the big red candle that tests support. That's known as the preceding candle. It is not the candle you trade. It's the candle that hits support. The next candle is known as the pivot candle. The pivot candle is a slowing momentum candle at your key level of support. All right. So we got a 15-minute test against the 15-minute 9. Fantastic. All things relatively equal. We got a 15-minute candle that is now a slowing momentum candle at that 9 EMA. Once again, really good. The third candle sniffed confirmation, came right back down, not ready for prime time. The fourth candle sniffed confirmation. Confirmation is the candle high here on your pivot candle. Sniffed confirmation, came right back down. So despite the fact that it battled for a good 30 minutes there, guys. It battled that key level of support, but never confirmed, not one time. It sniffed it, and it said not ready for it. And so if you were making a bull trade here off that 15-minute 9 EMA or off any pullback, we just really didn't see confirmation. And so if you ended up getting stopped out on that pullback, I'm not saying anybody did. I don't know what you guys were doing. I'm just saying there were traders who were buying this pullback here. And any trader who bought this pullback here, well, they eventually got stopped out. But the flaw was not the level. The flaw was not the story. The flaw was it didn't confirm your trade idea. The market never supported that quick pullback down to the 15-minute 9 EMA, came underneath it. And once it closes underneath it, you start tracking the deeper pullback. And so the first level you track is really in conjunction with the 23% level, and typically utilizing, for me anyways, I utilize that 15-minute 9 EMA. Now, before I get into the second series of the retracement, let's open it up to some questions here. Let me catch up on some questions. RQ. Yes, I changed the times on you, brother. Next, yeah, you can always go back to the beginning of the class and rewind, no doubt about that. Yeah, I love me some Livermore as well. Woji, if the candle goes as low as 50% during the retracement, but the body closes above 38%, would you still consider that a 50% retracement or 38%? I would consider that a standard retracement that you was utilizing the 50% level. That's what I would look at. And I would most likely, whatever that candle was, like we didn't get that here. We got it close, right? That candle wick came underneath that. But to me, it's really about what the body story is telling me. When you're looking at slowing momentum, Moji, it's the candle width. When you're looking at the total volatility, it's like when you're looking at ATRs and other indicators that track volatility, they track from the high to the low of the candle. When you're tracking kind of the slowing momentum, increasing momentum conversation, that's more of a body analysis. And so with wicks testing under, it's certainly choppy, it's certainly dirty. The retracement is dirty, but I don't see it any different. I don't see the wick coming underneath my level, and my level is the 15-minute 9 EMA. But the wick coming underneath my level just tells me that the buyers aren't there yet. It just tells me we're still testy, but I'm really just kind of looking at the body there. Then I'm looking at these wicks here. Now, if this wick comes all the way down to the 50% versus the 38%, I see this as the same zone. So for me, the momentum, like flag-based patterns, are anything 23 to 38. Anything between 38 and 50 is a standard pullback. Anything underneath 50 down to 61 is a deeper pullback. And again, the confirmation conversation is really important here, because and it's just something that you got to ask the market. The more you give up in a pullback, the more you're going to need to see from confirmation. For example, when you're dealing with the shallow pullback and only dealing with the momentum patterns like we're dealing with between 23 and 38%, anytime you're dealing with a pullback between that 23 and that 38% level, those are all momentum patterns. Even on a pullback, that's a momentum pattern. You move up. What we move up today on this this move from the low point here? You moved up about 54 points, right? So you move up about 54 points. You give up, 13 of those points to the. That's not momentum. That's bulls still control the momentum of the condition. And so because bulls still control at that 9 EMA, all you need to see is get it above that level. You really don't even need to see it close above that wick right here at 27, because that wick is the top of the slowing momentum candle. You just need to see it get above that level. You can easily put an order in right above that level to trigger in above the high of the confirmation candle right there, on any shallow flag type scenario. But if you start working deeper, and you see here, you start working to that 61% level right here, that's the this is the VWAP level. If you give up the momentum of the shallow retracement and you work into what's known as that standard retracement utilizing VWAP, that's going to be a pullback level, obviously. Now the question is, what do you do with it, right? The question is now, what type of confirmation do you need to see? Well, I think this candle kind of tells the story. That's very good confirmation here. You could have easily went above the high here, but the problem with going above the high on this confirmation candle is it's still staring down the barrel at the original confirmation level, which means, and the wicks tell a very accurate story here, that confirmation level from the flag is still the ultimate confirmation level here. And so as we navigate the next little bit, this level from that, you could have been aggressive off this VWAP test, getting above the high here. But if you're now looking up here, you can't do anything underneath that level. And so it's going to be and by the way, team, usually I switch this up into the 5-minute chart when I'm really kind of dialing this stuff in. So do you see how it gets into this VWAP here? Up, 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 gets right back up into the level, down, gets right back up into the level, down. Now, what we're seeing here after that after that standard pullback is consolidation, is what we're seeing. And so for me to make a trade here, okay, after we had the standard pullback in the marketplace, we're looking at this with fresh eyes. What do we need to see right this very second for us to process a trade here? What has to happen? If you're a bull, and I wouldn't be looking to short this pattern right now, but if you're a bull, what do you absolutely need to see happen here? And I'll give you guys a second to kind of chime in here. Because there's a thing. If you're going to make a trade, you have to see one thing right now. It needs to close above the original confirmation level. That's what it has to do. And so, and it's got a good edge, Reno. You go from support here against the low point here. It increases support right here. It's trying to increase support right there. The market's trying to put some pressure on that breakout. There's no doubt about that. The market's trying to put that put pressure on that resistance level, and you're getting testy. And so as long as you stay above this pivot, that breakout's alive and well. Woj, that's a great question. I track the pullback on the, like I do everything on pattern development, I track it on the 15-minute chart. But I really once I have my levels and have my trade plan mapped out, I will switch it to the 5-minute chart to kind of navigate on the 5-minute chart. And ultimately, when I am personally talking about confirmation, and again, I can only talk about myself when it comes to confirmation because every trader is going to be a little bit different there. But when I'm talking about confirmation for me is going to be on the 5-minute chart. I don't need to see a 15-minute close above the level to trigger. I will need to see a 5-minute close here to trigger, and it would be an aggressive trade where you're just trading it back up into the highs, and maybe we get a little bit of Momo on top of that, but I don't think you can anticipate it. And so you're really just trading this pocket here. And so your hope is, and because you've had wicks here and because you've had multiple different tests, you definitely want to see a 5-minute close. But no, I don't think you need to go, on the longer duration pattern developing chart, because again, when it comes to confirmation, there's always going to be 3 time frames day traders track. You have your bigger horizon time frame, which is for me the hourly chart. I like to look at the hourly chart. I like to look at the 4-hour chart to kind of have an understanding of the totality of the trend, where we're at in the trend, all of that jazz. By the way, this is just a 1-hour flag-based pattern as of right now. So I'd like to look at the 1-hour time frame to help me understand the big picture context, big picture levels, big picture stuff. I then go down to the 15-minute time frame to track pattern development and intermediate levels. And you know me, I like to anchor on the 15-minute 9 EMA quite a bit. But when I go down into execution, and when we're talking about confirmation above a level, I don't need to see a confirmation. For example, if I'm tracking a 1-hour level, I don't need to see a 1-hour close above that level to get into the trade. My execution time frame is the 5-minute time frame. And so if I see a 5-minute close above this level, it's go time. I'm not going to wait on the 15-minute close. I just need to see a 5-minute close there. So to me, and again, this is the story retracements tell. The flag-based pattern never confirmed. It got down to the VWAP level, which is the second series in the pattern development. It did confirm, but it was very aggressive. It did confirm. You could have went very aggressive there. I think Justin did, if I remember right, in the previous stream. You could have went very aggressive here, but you can't target above that confirmation because, again, it testy there. So it was a good trade, but I wouldn't say it was great pattern development. I actually like the pattern development now more than when it was just basing here off VWAP. I like a story that has a confirmation level at the 28 level that is a very well-known level as of right now. You see it kind of work underneath that multiple different times. But what's really telling the story here off that deeper pullback is the increases in support on the 5-minute time frame. As you increase support on the 5-minute time frame, that shows you that the bulls still have control of the price action. Yeah, have the bears done a little bit of work here? Not really. I think most of this was bull on bull stuff, personally. Maybe bears took it a little bit here. Maybe they tried to take it a little bit here. But in general, I do see this as a bull on bull story right now. And as such, those bulls are telling me they still control price, which as long as those support levels keep on increasing, I'm going to keep my eye on the price above that 27-28 confirmation level. And so when you're and this isn't rare, guys. When you start working deeper in a pullback, it takes a little bit of time to get that cleaned up. I wish we could just pivot and go, but if you're going to pivot and go, you need to be banking on a longer time frame on any type of retracement. So you look at this on the 30-minute chart here, for example, and you see that pullback to that same VWAP level, that same level we were talking about. This is now just a pivot and go scenario. When you look at the 1-hour time frame, that's just a pivot and go scenario. But when you come into the shorter time frames, you're going to see a bunch of other different patterns here. And so ultimately, guys, if the 5-minute chart confirms above the 27-28 level, that also means the 15-30 and the 1-hour time frame is getting above their pivots on their candles as well. So again, you come back out here to see kind of the quality of the level. 27-28 is the level. You come in here to the 15-minute time frame. Yep, that's those wicks are telling a story there. You know exactly. You don't want to touch that underneath that level on the 15-minute time frame. You look at the 30-minute time frame. Yep, telling the same story. You come down to the hourly time frame. Yep, telling the same story. We know where support is. We know where resistance is. And this is just a matter of confirming that ultimate standard pullback. And so we are still, like, the 5-minute chart confirmed off that standard pullback. The 15-minute chart confirmed off that standard pullback. The 30-minute chart, the hourly chart haven't confirmed. What does all of this tell me? All of this tells me is I better be ready to go above 27. That's what all of this tells me is, yeah, took a little bit of time to get that pattern to get dialed in here, but there is good trade structure now into the bigger picture against that 75-40 continuation expansion. So this level right here and this level right here are the only two levels of resistance in the market right now. They're the only two levels of resistance in the entire market right now, team. There's only two. There's only two. You have 75.27 and you have 75.40. Those are the two levels of resistance. And so if the market's going to break out of one of those levels of resistance, I'm going to be ready to rock and roll. And yeah, do I love like this from a standardized day trade? No, it's more of a scalp zone. But that scalp zone right there, if that is successful, that puts that 75-40 breakout extension alive and well. And so it's one of those things where not a big pocket here, but you can certainly make a trade idea in this pocket with the front run philosophy going into this T1 target at 75.40. And so once again, like when you're coming into the depth of the retracement here, team, the deeper you go, the more you're going to have to see. And that's exactly what we saw today play out so far is that flag-based pattern. It battled for 1 to 2 candles before it gave and it went deeper. And once it went deeper into the deeper retracement, you started seeing a little bit more consolidation base. The deeper a retracement goes, the more you're going to have to see. And that's exactly how it kind of plays, how it's been playing out here so far. We gave up this shallow retracement. We gave up this the 38 retracement. We got all the way down underneath the 50% retracement. We tested VWAP. VWAP and the 61% retracement is ultimately what transpired here. And anytime you see a deeper retracement, you're going to have to ask for a little bit of consolidation. That's what we got. And now it's just a matter of, are we going to get above level or not? Now, at what point would you entertain a short against the current pattern? Because it's one thing, and I do think this is important for all types of traders, but specifically for day traders. You always, and one of my law school professors taught me this a very long time ago. I'm going to teach it to you right now, but it's a problem for traders. It's a problem for politicians. It's a problem for a lot of people in our society who get so stuck on what they have in their mind that they think that's the only thing. What I've always said, you want to win a political argument, guys? If you truly want to win a political argument, you better understand your opponent's argument better than you understand your own. Same concept in trading. If you want to be a great trader and you're thinking about this as a bull, think about it as a bear as well. You always have to be prepared for upside mechanics and downside mechanics. Now, for me, I wouldn't ever entertain a short inside a pattern where it's trying to define confirmation for the bulls. I don't think that's a bearish situation. Now, that's me. There's people that live on shorter time frames that would disagree with that. I'm not here to disagree with them. I'm just here to tell you that that's not for me. I'm not going to entertain a short inside this pattern when there's a pivot right underneath and there's a pivot right underneath that. And basically we're trading within the backdrop of that bullish trend on the daily chart. We're trading within that backdrop of that parabolic uptrend on the hourly chart. We're trading within a support zone right here that is vastly important. So where would I entertain a short to start to think about more on the downside? It would have to clip this low for me. It would absolutely have to. And not only that, you guys might think I'm a little bit crazy, but I probably would not entertain a short here until I get a low base at 7,500. I get a low base at 7,500. I can bank on that screaming to 7,480. If you clip 7,480, we start entering into Pocketville. And so for the bears out there, my recommendation, and this is just me, I'm more of a bull. Obviously, especially on longer term horizons, but the bears, I wouldn't get nickel and dime inside a bullish pattern, guys. Like that's kind of crazy to me to get nickel and dimed inside a bullish trend, inside a bullish pattern. I don't think that's what bears should do. I think bears should do exactly what we talked about: identify your level and identify specifically what you need to see at that level. And so for me, I think this confirmation level, let me get back here, at the 75.28 level is the end all be all level. There's only two levels of resistance. Again, team, there's only that one at the 27.28 level, and there's only that one at the 40 level. So the bull's got to make a choice. Either you're going to make that trade or you're going to make that trade. That's the only two trades you got right now as a bull. Very simple analysis. As a bear, I just don't think you should look bear above VWAP here. Like, you got to pivot at VWAP. You got to pivot at 75.07. So you got VWAP at 75.10. You got to pivot at 75.07. And then you got a massive support level at 7,500. Every one of those levels buyers could gobble up. Every single one of those levels buyers could gobble up because they have gobbled them up. And so I personally want to counter trends. I'm not a counter trend trader. So where would I typically get a little bit more excited? I would typically get a little bit more excited as you start busting up the deeper retracement. Once you get underneath that pivot point, it's now bears have a little bit of the control. The only problem with this one is there's a short pocket between 75.07 and 7,500, which means I think the better level to bank on is this 7,500 level. And so to me, I'm looking at the breakout here. I'm not looking at anything on the downside here. Too much data, not gonna counter trend trade a bullish pattern within a bullish structure. So where does it not get bullish? Underneath 75.07. Where does it get clean? Where does it get some open air for the bears? That's underneath the deeper levels down here around 7,500. Now, so what I wanted to do today, guys, and this is kind of the first time I've done this lab where we had live market data and I was teaching a live concept while I was teaching an educational concept. But I did want to ask you guys a question. Did you enjoy that today? To dial in a specific educational session utilizing a pattern in the live market. I kind of had to go back and forth a little bit, kind of felt a little convoluted at times, but I really do truly hope you guys enjoyed that. I know I did. Now we're going to watch this play out. Thank you, guys. Thank you, Justin. Did you, RQ? That's the only thing that really matters to me. That you enjoyed the time change. Maybe not even that you enjoyed the time change, but that you caught the time change. Arena, we're going to do a lot more of that too. The protest. Are you sure it's ended there, Breezy? Like, are we sure RQ's protest has ended? I'm not sure. You waited all day for me. That makes me feel good. Yeah. Yeah, that's me too. Like this would be difficult to do for like Mike in the morning or power hour, right? It's a little bit of a slow time in the market, so I do like it. Much easier to teach a concept without price breaking the structure of the concept. You know what I mean? So I do like the slower time of the day. This is obviously one of the slower sessions during the trading day. I am looking forward to this breakout though. Well, that's some of the best trades you make is the ones you don't pull the trigger on. Like some of my best trades I ever made were trades that I got talked off the ledge about. Let's get you in those good trades there. Second question I have for the team. Are you enjoying YouTube more than Discord, as much as Discord? You just had 32 best trades? There you go, buddy. Oh, you scalpers make me smile. I don't make 32 trades. No, I don't. The lag here is a little, we gotta figure out a way to kind of decrease that lag impact a little bit. That's the one, RQ. Where's our memes? Come on, Google, get with the program. Everybody does memes these days. Let's post memes. Come on. Like, seriously, what's wrong with memes? Why are you scared of memes, Google? You're Google. You got more money than anybody. You literally are going to be first to position to AGI and quantum. You'll be first to position to AGI and quantum, and you can't get a meme? What are we doing? What are we doing? How do you communicate in a world without memes? Like, how are we traders expected to use things like words and sentences? We want memes. Memes tell the story. I'm with you too. I like a good meme too, guys. Now you get like icons. There you go.
But today, right now, we're just going to focus on psychology because you are here with me.